Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Share Shootout is back. Where did it go? But anyway, that's another issue for another day. Welcome to Share Shootout, the most vicious, backbiting, back-scratching, and occasionally back-patting game on television. I'm Bruce Whitfield. This is Share Shootout. I am your host, judge, juror, and executioner. Did you manage to stay awake during the entire State of the Nation address by President Jacob Zuma? Or was it just me who associated something sequestrian with horses? Anyway, how is it that Comair manages to turn a profit while SAA is always on hand for a bailout? We don't have all the answers to these very difficult questions. What we do know is we got a man who once swam the Straits of Magellan. Yep, that's at the bottom end of Latin America where it's freezing and icebergs come past. We've also got a Zimbabwean engineer turned South African equity strategist. So has Gary met his match, or will he come out victorious again? God, I'd be so bored of Gary. Introducing Mike the Milestone Haworth from Applied Capital Insight with 6 appearances, and he did, in the past, have 5 consecutive wins. And then he lost, and then he had a sulk, and he didn't come back for ages. He takes on, with 13 appearances, 10 wins and 3 losses, Gary, the Gordon Gecko of Santon Booysen from Vunani Private Clients. Well, let's have a look at what the rules are, because you know those by now. Each of our players has picked 3 shares. Neither knows what the other holds, and each must accept at least one of their competitors' picks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick, so let's let the share shootout begin. Did you really go and sulk for a whole year before you came back?
No, I just wasn't invited.
Oh, yeah, that's true. Oh, now I remember. Okay, so Gary, how you enjoyed today's victory?
It was wonderful.
Michael, now give me a sense, please, of what you've got in store. I'm looking at a company which has recently come out with results, a company that was a market darling, fell out of favour and now is back in favour. But you're going first because of your long absence this evening. I'm interested in this one, a property company called New Europe Property, NEPI. 30 seconds, tell me why you like it.
Romanian-based, net asset value growing 33%, good development pipeline, very acquisitive. This business is looking at earnings growth of around about 40%, 47% this year, 20-something% next year. You're on your yield curve in Europe is not kicking out, so your valuation issues aren't a big issue. So you're talking about high growth, high dividend yield, 6% rand hedge.
There we go. And he's playing that game where he doesn't use all of his 30 seconds. Have you ever been to Romania?
No.
Okay. Well, I don't know if I'd want to own Romanian property. It's all thatched and tumbled down. Well, that's rural. But certainly Romania is a little bit like Kroonstad. And Kroonstad does have growth potential. It hasn't been realised since the Adamies left. But so Romanian property, is it one that you would like, Gary?
I mean, NEPI has been, like you said, darling for a long time. But I'm a little bit nervous. You said, European yield curve's not really kicking out yet. But what happens if we do get to a tightening cycle? Property's been so attractive. Locally and offshore. It's been so attractive because there's been nowhere else. The bond yields have been so low that you couldn't get a yield anywhere else. So you saw funds filtering into property. If we do see a proper pull out of stimulus and we see rates starting to rise, is this not one of these listed property companies that's just going to collapse?
Are there perhaps Romanian fundamentals of which I and Gary might not be aware that would carry it through a cycle like that?
Well, it's part of the emerging Eastern Europe group. Take out Ukraine and the likes, but so there is high growth. It's in a development phase, and I understand Gary's concerns about the yield curve, and it is. In any property company, it's a critical element. But certainly for this year and perhaps beyond, I don't see. In fact, if anything, I actually think that the property sector, even in this country, because the yield curve is stabilising, is actually a much more interesting bet all round. You're not going to get much top-line growth in many of the companies in South Africa or overseas at the moment. So, your yields are now becoming altogether more important investment decision. And I think this is a great yield. Does
Vlad the Impaler's castle form part of this? Because I've been to Cluj-Napoca, and it's a fascinating city in terms of its Soviet-era squat blocks of flats and all sorts of things like that. It's a really strange place with modern centre, a communist centre, and then you go out into rural Romania, and it's absolutely beautiful. SAB Miller brews some very nice beer. They're called Ursus. You should try it next time you go. Will you take NEPI? We know what babies do in NEPIs, but would you take NEPI?
I'm going to shoot it down. Yeah, I probably don't know enough about the Romanian property market. I know, there was a lot of hype around the Bulgarian property market for a while, and every UK citizen was trying to get property in Bulgaria. That didn't work out too well for them. So for me,
it's risk. You've got to take some risk.
Yes, it is risk, but I think it's run very, very hard in a sector that shouldn't be running that hard. And I think you're going to see some sort of return to mean as the rate tightening cycle continues. So I'm going to.
You're shooting it down.
You
always shoots down the first one.
That's fine.
You always shoots down the first one. Always. Okay.
I'm confident.
You're always confident. Gary Booysen from Vunani Private Clients. This is an interesting pick. It's the first time, I think, in a very long time, if not ever, that somebody has picked probably the best performing share in subsequent years, 2 or 3 years ago. And that was Pinnacle Technologies, a spectacular performer over 10 years. If you put in 1,000 Rand, you became super rich. It's been one of those really go-go companies. Yeah. Why do you still like it in 30 seconds?
Well, I think we're definitely still in the bull market phase of this in this market, and I think that's why we can look at some of these smaller caps that are trading at probably less extended valuation. So the forward PE is around 9. It's not demanding on the counter, whereas some of the other counterparts are. I mean, it's obviously got a very exciting deal. If it does take out data centrics, that's going to add a huge service component to its revenue, and just probably stabilize the earnings in the business a little bit, and that is very exciting for me. I think you can see just with that deal, if it does go through, £6 kicker on the share price up to $30.
33 seconds are up. EOH. Why not EOH and why Pinnacle?
I like EOH as well. I also think EOH is a fantastic business. I think EOH is a little bit too extended at the moment. So EOH, if you look at the valuations of EOH, when it's now, I thought it was going to stabilize at around that 85 level. It's now kicked up again. I think that one's just getting a little bit extended. I love EOH as a business fundamentally, just a bit too expensive.
Okay, but Pinnacle Technology, one-time darling. It hasn't done particularly much for a little while now. Mike, would you like it?
I think it's reached its pinnacle.
It's reached its peak.
No, just to be a little more serious, I think that the fact that the Rand has weakened as much as it has, all the import-dependent companies obviously have a much higher input cost. That's the very first thing.
Which can only improve from here as the Rand strength. No, you don't believe that. Okay, yes.
Your words, not mine. That's the first point. The second point is one of the things that you're seeing in the longer-term trends, you're seeing tremendous morphing in the hardware part of the IT business, where in fact actually most of the laptops and whatnot you won't buy them in the future.
No.
Firstly, and secondly, most of them don't have hard drives, so everything's going into the cloud. So there is a manifest migration taking place in the hardware industry.
What about that, Gary?
Now, we've looked at that. You're talking about obviously the form factor. So, we're used to sell PCs. If you look at what Pinnacle's doing, they're selling phones, tablets as well now. It seems like they are successfully, moving into that space. They're doing a lot of work with Samsung, bringing in Samsung products. So that is competing with the likes of the Apple, which is probably their biggest competitor in that space. I think optimistic. Pinnacle, I think the management is dynamic enough that they will move with the times. It's a fundamental thing that you've got to look at probably first and foremost in any technology company. Is it going to keep pace or is it going to be left behind? We think, it's definitely Arnold Free's going to take it forward.
You're seeing the uphill, you're looking at the Pinnacle, you think it's peaked, and in fact you think it's going downhill.
It's going to have to morph itself. There's no question about that. And I would agree with Gary. Good management teams have this ability to adapt. I just think, if we're taking a view over the next year, I don't think it's going to do.
You're shooting it down.
I'm shooting it down.
He's shooting it down. You're shot down, Gary Booysen. I'm afraid it's over the hill. Right, Michael Wills from Applied Capital Insights. Let's look at your next pick, which is fascinating because you're liking dividends, you're liking good dividend yields, you're liking companies that have got almost practically a guaranteed dividend stream. Not that there are such things. Ask shareholders in Anglo American and Old Mutual of 2008.
Yeah.
For the time being, though, Kumba Iron Ore's dividend stream looks very secure, and it's recently paid out like a 40 Rand and 3 cents or 40 Rand and 4 cents as a share dividend on the share price of 444 Rand. Extraordinary dividends. They're really managing the dividend cover very nicely. I'm almost doing your 30 seconds for you. If there's anything else left to say, you've got 30 seconds in which to say it.
Production growth is going to be another 10% this year. The mix of fines and lump shifting in favour of lump, so you get quite a nice $10 to $20 premium on that. So that will compensate if the prices. I'm not expecting the prices to go anywhere this year. And maybe they come off a little bit in the second half, but I think broadly speaking, I don't expect the Rand to do much and I don't expect the commodity price to do much. So this is all about what's happening inside the company. They've just bought that long tract of land from the rail, and of course what that does is it improves their access.
This is really interesting. Sorry, I'm
into
learning new stuff.
their access on the mine.
I expect it to be credited to me.
And I think it's what is also interesting is their strip ratios are not nearly as big as they thought they were. So it's an extremely well-run mine.
There we go. Thank goodness he eventually stopped. 45 seconds.
Well,
I think that's a record.
I averaged from the 30 seconds the previous time.
There we go.
Yeah, okay.
Oh, no, he had time and credit. My producer's saying, yeah, no, it's absolutely fine. Kumba Iron Ore is a really good story. Fatality-free last year, which is, I think in the mining sector is extraordinary, plus they're making money in a tough environment, plus they've got supply constraints. They've now done a deal with ArcelorMittal. They no longer are distracted fighting court battles and discovering who said what and who stamped what in the deeds office at any particular point in time. You got to like Kumba.
What is it? It's session cost plus 20%.
Session cost plus
Session
20%.
cost
Yes.
plus 20%.
Yeah.
Yes. No, I do like Kumba. I think fundamentally, I'm still a little bit worried about the commodity story in general. But I mean, I think Mike's right. The actual story behind Kumba itself is brilliant. I mean, you can't argue with that sort of dividend yield. They're printing money, and I think if I had to pick a resource company, this is the one that I would take. So I'll accept it. I think if you look at the Columella mine as well, it's ahead of schedule in development and really just low cost and brilliant. So
what's the lifespan of their South African assets, iron ore assets? What are they looking at? Have they got a 20-year pipeline of iron ore, or is it a 50-year pipeline? What are they working on? What is the sustainability of a Kumba iron ore, extracting ore from South Africa?
I don't know what the life of the mine is, but obviously what's now starting to happen with the extra 20 or 22% rights, they've still got to get some of the conditions worked out with the department, but that's obviously opened up the medium-term aspect of that mine dramatically, getting the strip from the railways 30 metres times 14 kilometres, but obviously there's all the parts on either side of it. Also helps. So iron ore is not going. I mean, it's obviously there's a lot of it everywhere, but South African iron ore, the hematite that they produce, is some of the highest quality in the world. So if things start to get tough, I would think that
they're almost a default option. If you're going to stop importing your iron ore from somewhere else, you'll cut somewhere else. You'll keep doing the
and Bruce, a 9% forward dividend yield. What's not to like?
No, it's gorgeous. It's absolutely delicious. And Gary is taking it with both hands. You made it easy for him, Mike. You're going soft. All right. So Mike, Kumba Iron Ore gets the big thumbs up. Gary, before we go to the break, we need a final pick from you for this part of the show. 25 billion rand company. The only person I've ever seen take as a compliment, "You're incredibly boring, man," is Janet Yellen, who was basically told by a Republican senator in the Senate when she gave her first talk to Congress, "You're a bit like Bernanke. You're incredibly bright. You're incredibly dependable, but you're not very exciting." She said, "Thank you. I appreciate that." That's a bit like Barloworld.
That's exactly what you want in a central banker, and what you want in Barloworld.
30 seconds, tell me why.
Okay, Barloworld, I think it's a good business. I mean, it's been through some tough times, but I think there's huge growth potential there. I mean, if you look at just how they've managed their growth, their assets now. I mean, their last results. I mean, it was they're expanding margins quite dramatically, and with the Bucyrus deal, they've got a massive amount of new machines that they can send out. I mean, obviously the criticism is maybe mining and construction won't kick up. I mean, you've already heard Clive Thompson come out and say, even with this maintenance that we're doing, we're going to be able to maintain this sort of earning growth, and that's fantastic. I mean, earnings growth, you can't argue with that earnings growth. I mean, what is it, 27%?
Can you argue?
No.
Okay, excellent. So you're not going to argue about it.
No, I concur with Gary. I mean, I think on the basis that the peripheral European economies is now starting to actually come alive again. That's a pickup. So the Iberian business, actually, Finance Auto, starts to look better. The Russian side's going really well. Africa's rising. Not South Africa, but the rest of Africa's rising.
Absolutely, but that's the market. I mean, mining on the continent, even South African construction shares, if you look at their movement recently, there's been a switch out of something, possibly retail's run its course, so we go into South African construction. We don't have huge projects in the pipeline, but what we do have is moving share prices, some indication that there may be life in construction, and they would supply into that.
And the deep level miners are making sure that deep level mining is not an attractive place to play. So you want to go open cost. And the other thing is that in Barlow's, a relatively small proportion of Barlow's is motor vehicles, and we know those are going negative now. So I don't think they're going to be as impacted by the other big as the other big guys. In
So
the motor
Imperial is far more exposed to motor cars. We've seen Imperial plummet. Barloworld
And the
has held
One.
up quite nicely. Beg your pardon?
and the one,
And the one?
the Korean one.
Oh, the one. Sorry. Oh, I've got to be faster. Okay, they're picking a fight this evening. Righto. Who will vanish and who will vanquish? We'll do that in the final picks in just a moment. Mike Haworth is being mouthy, trying to get himself booted out because he'd rather be taking photographs somewhere in the bush. But if he wins this evening's contest, he not only has the glorious joy of unseating Gary Booysen, who has been standing in that spot wearing a big hole in the carpet, very plush carpets, for a very long time, but also he will then get to come back next week. So who will vanish, who will vanquish? So far, Gary Booysen from Vunani Private Clients with Pinnacle Technologies and Barloworld. Barloworld getting the big thumbs up. Pinnacle shot down. And Mike Haworth's new Europe property, NEPI, that was shot down. But Kumba and all gratefully accepted by Gary. Two more picks. Can they argue against them? You'll find out in just a moment. Welcome to Share Shootout here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield, and we've got Gary and Mike. Both of us are given their two stock picks. From Mike, we've got New Europe property in NEPI, shot down mercilessly. Kumba Iron Ore. Gary took it and he said, thanks very much for a forward dividend yield of 9%. Anybody would take that in their sleeve. Gary Booysen from Vunani Private Clients, Pinnacle Technologies, an adventurous choice, but Mike's not buying it, but he will take Barloworld. Gary, you're going first this round. I need to know why you are a fan of Grindrod. Recent trading update coming out, nicely diversified, different income streams, no longer just about bulk shipping, which is pretty dull. 30 seconds.
Yeah, you said bulk shipping pretty dull. I think that's where a lot of excitement can still come from. I mean, obviously that's the very cyclical business where you can get huge earnings. I mean, I think at the peak of the cycle in 2008, you're looking at an ROE of 50% if you get shipping right. And by all early indications, the shipping is going to come right. But that's no longer the whole story of the company. Obviously, they've got the ports, the rail, the terminals business, which is doing well, and also the trading business. You mentioned the latest trading update. It was very good. I mean, if you look at the actual earnings per share, very good. Headline earnings a little bit low, I think, between 12 and 18%, but that was because of a once-off impairment, which we don't think will continue.
There we go.
So nice buying opportunity.
I just look at shipping and I look at logistics and I look at the vulnerability of these companies, Mike. And somebody showed me an app the other day where you can go anywhere in the world and see where ships are. And you can click on an icon and you can see the name of the ship. It means nothing to you, but it's quite exciting. Outside the Richards Bay coal terminal for more than a week, a growing flotilla. It was like Sir Francis Drake going off towards Spain with a flotilla of ships waiting outside the Richards Bay coal terminal because of a power cut. Nobody's fault in the terminal, nobody's fault at sea, but these ships are sitting, bobbing about the ocean, making everybody seasick. Isn't that a vulnerable industry from that perspective?
Well, yeah, I think the whole of South Africa's got that problem for the first, in fact, for 2014 by the sounds of it. I think the issue for me in Grindrod, I like the diversity. I think they've done great work in diversifying that business, which is what it needs. I mean, I like the logistics and I like the port side of it. That's superb. The shipping side, we can see freight rates have actually bottomed. Are they going to pick up? That's the question. I don't think the dollar's going anywhere, or the rand dollar's going anywhere. In fact, it could strengthen, which is going to be a bit of a problem. And I think certainly from a trading point of view, I think a lot of the movement has been seen last year. I'm not sure we're going to get the same kind of the trading opportunity. So my sense would be that certainly from the shipping side, from the rand hedge side, and from the trading side, things are going to be quieter this year. I like the other two parts of the business.
Grindrod's a bit of a has-been overall.
No, okay, I mean that's one opinion, but I can't take it. I mean, you look at it. Earnings per share, between 35 and 45% up for last year. That's huge momentum. The only reason those earnings weren't a little bit stronger was that there was a once-off impairment in their agricultural commodities division. I mean, you can't say, oh, that's just going to be stagnant. Not with, the global, the global environment improving. I mean, you look at, like their handy size and their super, their Cape size at least. Both of those massive. I mean, they've ordered extra ships, and I mean the utility rates are increasing quite dramatically. They're going to sell off their old fleet at far elevated prices. I mean, there's a good story behind this company.
The bigger they are, the harder they fall. That's the rule I was taught playing as an 8-year-old playing rugby for the first time. You would have grown up with the same philosophy. Take him down, Mike. Well, can you argue?
It's not that big a company. So
well, Gary is big.
For starters,
that's what I'm talking about.
Definitely is. But
take him down.
Yeah, I see the softs in in dollar terms all weakening this year because of good supply. I don't see the commodity prices going anywhere, and in terms of our whole trade account, I mean, we actually have to slow our imports down,
or lift our exports. And manufacturing numbers came out last week. They were showing a little bit of life. We've got a manufacturing sector, a tiny bit of life, but there's a pulse. Look, a pulse is better than nothing. But you're shooting him down anyway.
Yeah. Listen, I do fundamentally like the company. There are a couple of issues there.
You can accept to. It's fine.
Yeah.
Gary,
it's going to make a market.
And an impassioned appeal by Gary Booysen, but you're not moved. You've made bigger men than him cry in the past. Absolutely, yes, stirred but not moved. So you're letting it go. I'm afraid you're shot down on that one, Gary, but a fine effort nevertheless. I'm interested then in how you're going to argue this one, Michael, with Nampak in 30 seconds.
Expanding into Africa, it's tidied itself up in South Africa, largest packaging company in Africa. It's basically following all the big bottling companies into Africa. And the rising middle class in Africa is very much about packaging and the bottling type of product. So I think Nampak's, you can see the kind of growth it's getting. I think its growth in the last year, I think growth in the African business was 60%.
There we go. It was nice growth from a low base, Gary Booysen. You can't shoot down Nampak, surely. Not even.
No,
you.
I can accept two, and I'm going to accept two. I'm going to euthanize myself on the show.
You're going to euthanize yourself?
No, I like Nampak. I think Nampak's a good. That's a good one. I like Nampak. I think
you got a hot date next week, haven't you?
I can't come back. I'm sorry. No, I think if the one thing that is going to, you're always going to grow packaging. I mean, more products, and the products seem to get smaller, and the packaging seems to get bigger.
But what is it about that argument has been in force for the last 10 years? What has changed has made that argument valid now for the first time in a
urbanization and decentralization of retail. Urbanization is a concentration, decentralization of retail, because in most of these African cities are not going up, they're going out.
Yeah.
So retail actually has to follow the city out. And that's
as we've seen, I mean, if you're confused about that concept, you just look at Gauteng, for example, and you see the proliferation of retail.
Everyone talking about these 14 shopping centres in South Africa being a complete overkill. Well, actually, if you think of the structural, logistic nature of this economy, as we urbanize, the packaging companies are following the retail companies. And Gary's point about break bulk and changing packaging sizes, that's exactly what certainly your food companies are going to do. They'll change your packaging sizes, and per unit cost is still going to carry on going up. So packaging is a great business now.
You know what they're calling it, of course, because you've got inflation, and you've got stagflation, and you've got deflation, and then there is another word which has been invented for items, products becoming smaller as well, and I forget what it is. It's like misflation or something, where packages become smaller. But packaging, people who read this cycle 10 years ago got the timing wrong, because the economy were seeing the trends, but they got it wrong. Now is an appropriate time. Gary Booysen, I can't believe you've rolled over like a puppy.
Nah, it's been a long time. This hole is going too deep.
No, absolutely. Because it was up until the point that you euthanized yourself and took 2 shares. You're going to be the laughing stock of the world. You were in the lead. My producers were going, no, it's definitely Gary. Michael might sulk for another year, but he'll come back eventually. Because Michael, you brought with you 3 shares. You brought NEPI, New Europe Properties, specifically focused on Romania. Gary shot it down. Kumba Iron Ore, he loved it. And Nampak, to my surprise, he's taken Nampak as well. So you get 2 of your picks accepted. Gary Booysen from Vunani Private Clients, Pinnacle Technology shot down. Barloworld, however, was accepted. In Grindrod, I felt that Mike was actually on your side on this one. He was nitpicking a little bit, and that's what was counting against him. But he is a man. He's a real man. He decided he would fight this fight right to the bitter end. He looks very nice, but deep down there is an ice cold heart beating ice cubes, and that's how he likes to win the game. Join us again next week, because we'll have Mike back again, and Gary, I'm afraid you are toast. Whew, makes a lot of smoke. Anyway, join us again next week as our contestants battle it out right here on the most ruthless stock picking show yet on television. Thank you, Mike, and we'll see you next week.
Thank you.